Hi everyone, in this video we'll be going over A-Level Accounting 2022 October-November paper 2 question number 1. This is the structured paper 2 which consists of 4 questions, 2 of 30 marks and 2 of 15 marks, and we're also given a time limit of 1 hour and 30 minutes. Since question number 1 is of 30 marks, ideally we should be spending about 30 minutes in order to complete this question, and in this video as well we will be attempting to solve this question under 30 minutes. Now without any further delay, let's get started. The following balances have been extracted from the draft financial statements of H Limited at 30 September 2022. Alright, then the directors discovered that following had not been accounted for. So let's have a look at each of these information. Plant and machinery had been purchased for 16,500. This was settled by the part exchange of a machinery with the net book value of 11,800 and a bank payment of 4,700. So we purchased a new machinery which cost 16,500. And out of this value, we paid 4,700 from our bank. So the remaining value was paid for by the part exchange of a machinery, right? Let's figure out its value. That's going to be 16,500 minus 4,700. So the part exchange value is going to be 11,800. And we can see that the net book value of the part exchange machinery is also 11,800, which just means that the part exchange value is equal to the net book value. This results in neither loss nor profit on disposal. Alright, then the second information states that no depreciation for the year had been charged. Plant and machinery is depreciated at 10% per annum using the reducing balance method, which means that we need to apply this rate of depreciation to the net book value. And we are also told that a full year's depreciation is charged in the year of purchase, which means that we need to charge a year's depreciation on this new machinery of 16,500 and none in the year of disposal, which means that we do not need to charge any sort of depreciation on this part exchange machinery with the net book value of 11,800. Let's figure out the depreciation charge for the year. We can start with our existing net book value of plant and machinery, which is given right here. It has a value of 52,000. So that's 52,000. And we already discovered that we do not need to charge any sort of depreciation on the machinery with the net book value 11,800. So I'm just going to subtract this amount or exclude this amount. Then we are also told that we need to charge a full year's depreciation in the year of purchase. So I'm just going to include this value of 16,500, which is the cost of new plant and machinery. So that's plus 16,500. Now this is our total net book value on which we need to charge the depreciation. So we can just multiply it with the rate of depreciation, which is 10%, which we can write down as 0.10. This results in the value of 5,670. That's our annual depreciation. Then the third information states that a bonus issue of 1 ordinary share for every 4 shares held had been made on 1st June 2022. The directors had decided to keep the reserves in the most flexible form. So this is a bonus issue, which means that no cash is being invested from outside parties. So we need to fund these issues with our own reserves. And the reserves that we will be using is our share premium. And if it is not adequate to fulfill our value of bonus issue, then we will be utilizing our retained earnings. Okay, so we know that we're providing 1 new bonus share for existing 4 shares. So this just means that for every 4 ordinary shares, we'll be providing 1 new bonus share, right? So utilizing our unitary method for 1 ordinary share, we need to provide 1 by 4 bonus shares. Now let's figure out the total number of ordinary shares before this bonus issue. We can see that our share capital is given right here with the nominal rate of 1 and the total value is 80,000. So we need to figure out the number of ordinary shares, right? And the number of ordinary shares is just the total value divided by the nominal rate. In this case, the total value is 80,000. And the nominal rate is 1, which means that our total number of ordinary shares is 80,000. So we need to figure out the corresponding bonus shares or the number of bonus shares for these number of ordinary shares. So for 80,000 ordinary shares, we're going to have 1 by 4 times 80,000 bonus shares. This results in 20,000 of bonus shares. And remember that bonus shares can only be issued at the nominal rate. So our ordinary share capital will be increased by 20,000 times the nominal rate of 1, which is again 20,000. And we need to fund these issues from our own reserves, right? And like I said before, the very first reserve that we will be utilizing is share premium. And we can see that the total share premium is 19,400, which is less than the value that we require of 20,000. So we'll be funding this value with the share premium of 19,400. Now, from the total of 20,000, we already funded 19,400 from our share premium. Now the remaining balance is going to be 20,000 minus 19,400, which is 600, right? And the next reserve that we will be utilizing will be the retained earnings, which just means that from retained earnings, we will be funding 600 for this bonus issue of shares. All right. Now, an interim dividend of 0.03 per share had been paid on 1st September 2022 on all shares in issue at that date. So the total number of shares on which we will be providing this dividend is going to be the existing number of shares of 80,000, right? Plus the bonus shares of 20,000. So the total number of shares is going to be 100,000. Now let's figure out the total amount of dividend. That will just be the dividend rate per share times our total number of shares. In this case, that will be 0.03 times 100,000, which results in the value of 3,000. All right, then property had been revalued downwards by 4,000. Let's have a look above. Previously, we have our property at valuation with the amount of 65,000, right? And now it has been revalued downwards by 4,000. So the new value is going to be 65,000 minus 4,000, which results in 61,000. All right. Then 1/2 of the 8% bank loan had been repaid on 30 September 2022. So let's figure out the repayment amount. The total value of the bank loan is 28,000. So that's 28,000. And we're only repaying 1/2. So that's divided by 2, which results in the amount of 14,000, which means that we repaid 14,000 from our total bank loan. And the last one states that a provision for doubtful debts of 5% was to be made. And remember that the provision for doubtful debts is just going to be our total trade receivables value times the rate. Let's have a look above. The trade receivables we have is 26,400. So that will be 26,400 times our rate for provision for doubtful debts, which is 5%, which you can write down as 0.05. And this results in the amount of 1,320. All right, this concludes all of our additional information. Now let's move towards our first question. We need to prepare the journal entry to record the bonus issue of shares. Dates and narrative are not required. Okay, the thing that we need to remember during the bonus issue of shares is that we are basically increasing our capital, right? And that increment in capital is always recorded on the credit side. And the increment is happening to our ordinary share capital, right? And we figured out that the ordinary share capital will be increased by 20%. So this amount will be recorded in our credit side of the journal entry. Now let's figure out the items to be recorded on the debit side. We know that bonus issue is being funded by our own reserves, which is the share premium and retained earnings. We already figured out the amount for the corresponding items, right? And the share premium and retained earnings are also a part of capital. And we are basically decreasing these values from these two reserves. So we are basically decreasing our capital, right? And the decrement in capital is always to be recorded on the debit side in our journal entry, which just means that we need to record the item share premium with the value 19,400 and retained earnings with the value 600 in the debit side of our journal entry. And we need to record this increment in the ordinary share capital on the credit side with the value 20,000. So let's write it down. That's the debit side. That's the credit side. On the debit side, we have our share premium with the value of 19,400. Then we also have the retained earnings with the value of 600. And then on the credit side, we have ordinary share capital with the value of 20,000. This concludes the first part of this question. We can now move towards the second one. We need to calculate the net book value of plant and machinery at 30 September 2022. Okay, I'm just going to write down the statement in order to figure out the net book value of plant and machinery at 30 September 2022. We first start with the given value or the given net book value, which will be our opening balance. So that's balance BD. Then the next step would be to add all of our new purchases, or we could term it as additions. And the value at which these additions should be mentioned is at its cost. Then the next step would be to subtract all of our disposals. And the value at which we include these disposals would be the net book value. Then the next step would be to subtract all of the depreciation charges for the year. And then this will give our net book value at the date of 30 September 2022. Okay, let's have a look above for the opening balance. We can see that the plant and machinery at the net book value is given right here to be 52,000. So let's substitute this value in our statement. That's 52,000. Then we need to include the cost of addition, and we purchased plant and machinery for 16,500. That is our cost, so we need to include this or add this. And then we also part exchange the vehicle, which acts as our disposal, right? And the net book value of the part exchange machinery was 11,800. So we need to subtract this in our statement. And we've already figured out the depreciation charge for the year above. So let's have a look. The depreciation amount was 5,670, and we also need to subtract this in our statement. So let's write it down. And that's 5,670. Now the net book value of plant and machinery at the date of 30 September 2022 is just going to be the sum of these four amounts. That's 52,000 plus 16,500 minus 11,800 minus 5,670, which results in the amount of 51,030. This concludes the second part. Now we can move towards the third one. We need to calculate the adjusted balance of cash and cash equivalents at 30 September 2022. Alright, we start with the given balance or our opening balance. Let's have a look above. The total for cash and cash equivalents is given right here, which is 2,590. That will be our opening balance. Let's write it down. Now the adjustments to be made will just be the cash inflows and cash outflows. We will be adding all of our cash inflows and we will be subtracting all of the cash outflows. Alright, let's have a look at the additional information. For the first one, we were told that we made a bank payment of 4,700, which is a cash outflow. So we need to be subtracting this amount in our statement. Let's write it down. So that's for plant and machinery. We paid out 4,700. That's an outflow, so I'm just going to record it in a bracket indicating that this amount needs to be subtracted. Then for the next one, we have depreciation. And remember that depreciation is a non-cash expense, so we can just completely ignore this. The third one relates to a bonus issue. And as I said before, bonus issue does not involve cash inflows from outside parties. We will be funding this issue with our own reserves, which means that this transaction does not involve any sort of cash, so we can just ignore that. Then we have interim dividend. We paid out 0.03 per share. And the total amount that we paid was 3,000, which means that this acts as a cash outflow, which needs to be subtracted. Let's write it down in our statement. So that is of dividend. And we paid 3,000. Let's have a look at the next information. We are told that property had been devalued downwards by 4,000, and this again does not involve any sort of cash. For the sixth one, we were told that we repaid one half of the bank loan, which just means that we paid out 14,000. So this now acts as a cash outflow for our business, right? So we need to subtract this amount in our statement. Let's do that. That is our loan repayment with the amount of 14,000. Let's have a look at our last information. We are told to create a provision for doubtful debts of 5%. Again, this is not really a cash outflow because we only put this amount as a reserve. So we do not need to adjust this amount in order to figure out our total cash and cash equivalents, right? Which means that this just concludes our statement. Now we can figure out the adjusted balance. That is just going to be the sum of these four amounts. That's 2,590 minus 4,700 minus 3,000 minus 14,000, which results in the negative balance of 19,110. Since this is a negative balance, I'm just going to write it down in a bracket. Alright, this concludes the third part. We can now move towards the fourth one. We now need to calculate the adjusted balance of retained earnings at 30 September 2022. Again, we're just going to create a statement starting with our opening balance. So that's balance BD. Let's have a look above for our retained earnings balance. That is given to be 27,350, which will act as our opening balance. So let's write it down. 27,350. Now let's have a look at our additional information. The first one tells us that a new machinery had been purchased with part exchange and a bank payment, right? And for part exchange, either there can be loss, there can be profit, or there can be neither loss nor profit. And in this case, our part exchange value is equal to the net book value, which means that there is no profit and there is no loss. So we do not have any adjustment to be made in our income statement, right? So there is no changes in profit. So we can just completely ignore this first statement. Then the second one tells us that the depreciation for the year of 5,670 had not been accounted for. And remember that depreciation is an expense that reduces our profit. And profits are always added to the retained earnings, right? So profits are added, but this amount will reduce the profit. So that's a minus. So plus and a minus results in a minus, which just means that we need to subtract this amount of 5,670 in our adjustments to figure out the correct balance of retained earnings. Let's do that. That's going to be depreciation of 5,670, which we need to subtract since this amount is also going to decrease the value of profit. All right. Then the third one tells us that there is a bonus issue of ordinary shares, right? And for the bonus issue, we utilize our retained earnings to fund it, which just means that we take 600 out from the retained earnings. So that is just a subtraction in our retained earnings, right? So we need to reduce this amount of 600. Let's write it down. For bonus issue, we need to subtract 600. Okay. Then we have dividend paid out, and the dividend paid amount is always to be subtracted from the retained earnings, which just means that we need to subtract this amount of 3,000. Let's do that. That will be the dividend of 3,000. Okay. Then we have revaluation downwards of 4,000. And this revaluation downwards is to be adjusted in our revaluation reserve. This has no effect on the retained earnings, so we can just completely ignore this for now. And the sixth one is the repayment of bank loan. Again, the repayment of bank loan does not really affect our retained earnings. And the final one we have is a provision for doubtful debts. And remember that we are not given the opening balance for provision for doubtful debts. So this total amount of 1,320 is going to act as our expense, right? Which just means that this amount will reduce the profit. And remember that the profits are added to our retained earnings, and this amount reduces it. So that's a negative. Plus and a negative results in a negative value, which just means that we need to subtract this amount of 1,320 in order to figure out our correct balance for retained earnings. Let's do that. We have provision for doubtful debts with the value 1,320. And this concludes all of the adjustments to be made, so we can now figure out the adjusted balance for retained earnings. And that is just going to be the sum of these five amounts. So that's 27,350 minus 5,670 minus 600 minus 3,000 minus 1,320, which results in the value of 16,760. This concludes the fourth part of this question. We can now move towards the fifth one. We now need to prepare the statement of financial position at 30 September 2022. Okay, so we will first start with our assets section, and we will be dividing the assets into two types, non-current assets and current assets. So let's start with the non-current assets. Let's have a look above. So we have two non-current assets. The first one is plant and machinery, and the second one is property. Let's write down the headings first. So that's plant and machinery and property. We already figured out the balance of the plant and machinery at the date of 30 September 2022 above, so we will just be substituting that amount. Right here, we figured out the net book value of the plant and machinery. And remember that the non-current assets are always recorded at its net book value in our statement of financial position. So we're just going to write down this amount of 51,030. That is 51,030 for plant and machinery. Now for property, we had a revaluation downwards of 4,000, right? And we need to subtract that. After subtracting, our balance is 61,000, which is going to be the net book value of property to be recorded in our statement of financial position. So let's write this amount of 61,000. This concludes the non-current assets. So let's figure out the total by adding these two amounts. That's 51,030 plus 61,000, which results in 112,030. Now we move towards our current assets. Let's have a look above. Alright, so the first one we have is cash and cash equivalents, but the adjusted balance was of a negative value, which means that that will be the bank overdraft, right? So we do not need to include cash and cash equivalents as our current assets. Then we have inventory, which is a part of current assets with the value of 48,900. So we need to record this in the current assets section. Let's do that. We have inventory with the value of 48,900. Okay. Then the next current asset that we need to include is going to be trade receivables, right? And the total amount is 26,400. But remember that while including trade receivables in our statement of financial position, we need to subtract the provision for doubtful debts as well. And the provision for doubtful debts was 1,320. So our trade receivables balance is going to be the previous amount of 26,400 minus the provision amount of 1,320, which results in the amount of 25,080. Let's write this down in our statement of financial position. So that is going to be trade receivables with the value of 25,080. This concludes all of the current assets. So let's figure out the total by adding these two amounts. That is going to be 48,900 plus 25,080, which results in 73,980. Now we can figure out the value for total assets. That will be the sum of the total of non-current assets and current assets. In this case, that's 112,030 plus 73,980, which results in 186,010. This concludes the assets section. We can now move towards equities and liabilities section. We will be starting with our equities. Let's have a look above. The items to be included in our equity is going to be ordinary share capital, share premium, revaluation reserve, and retained earnings. So let's write down the headings first. We have ordinary share capital, then we have the share premium, we have revaluation reserve, and retained earnings. Alright, so ordinary share capital, we have the previous value and we need to add the bonus share amount as well. So the previous value was of 80,000 and by bonus share the increment was 20,000. So the total is just going to be 80,000 plus 20,000, which results in 100,000. So that will be the total value of ordinary share capital. Let's write it down. That's 100,000. For share premium, we have our previous balance of 19,400, but we utilized the entire 19,400 in order to fund the bonus issue. So the new balance is 19,400 minus 19,400, which results in 0. So there is no share premium. We could have just not write down this heading. So I'm just going to write down dash or value 0. Then for revaluation reserve, the previous value was given to be 23,000, and remember that we revalued property downwards by 4,000, which means that the new revaluation reserve value will be 23,000 minus 4,000, which results in the value of 19,000. Let's write it down in our statement of financial position. So that's 19,000. And for retained earnings, we already figured out the correct balance at the date of 30 September 2022, right here. So we're just going to substitute this value of 16,760. So we can figure out the value of total equities by adding these three amounts. That's 100,000 plus 19,000 plus 16,760, which results in 135,760. Alright, then we can move towards our non-current liabilities. Let's have a look above. We only have one non-current liability, and that is of 8% bank loan. And out of this, we already paid half of it. So we already paid out 14,000, which means that the remaining bank loan is now going to be 14,000, right? So let's write it down. That is 8% bank loan, 2028 to 2029. And the amount is 14,000. That is the only non-current liability. So we can now move towards current liabilities section. So the very first item will be the bank overdraft, because remember that we had the negative cash and cash equivalents at the date of 30 September 2022. And we already figured out its amount above. So we're just going to substitute that value right here. This is the adjusted balance of cash and cash equivalents, which is negative 19,110. This will act as our bank overdraft. That is 19,110. Now the next current liability, let's have a look above. We have trade payables with the amount of 17,140, and no adjustment were made to this amount, so we can just substitute it. That will be trade payables with the value 17,140. Now the total current liabilities will be the sum of these two amounts, 19,110 plus 17,140, which results in 36,250. Now we can figure out the total equities and liabilities. That is just going to be the sum of total equities plus non-current liabilities plus current liabilities. In this case, that's going to be 135,760 plus 14,000 plus 36,250, which results in 186,010. Okay, we can see that the total assets was also 186,010, which is equal to the value of total equities and liabilities, which just means that our statement of financial position is correct. Which concludes the fifth part. Now we can move towards the sixth one. We need to explain two differences between capital reserves and revenue reserves. Alright, so the very first difference is that capital reserves are created as a result of non-trading activities, whereas the revenue reserves are created by the transfer from profits or the trading activities. Let's write it down. Capital reserves are created as a result of non-trading activities, whereas revenue reserves are created as a result of trading activities. Now, the next difference is that capital reserves cannot be used to pay shareholder dividends, whereas revenue reserves can be used to pay shareholders dividends. This is because dividends are to be paid out of profit, right? And profits are recorded in our revenue reserves and not the capital reserves. Okay, let's write it down. Capital reserves cannot be used to pay shareholders dividend, whereas revenue reserves can be used to pay shareholders dividends. This concludes the sixth part. We can now move towards the seventh one. We need to explain one accounting concept applied when making a provision for doubtful debts. Alright, so provision for doubtful debts are the reserves that are created so that in future, if some debtors cannot pay the trade receivables, we can utilize those reserves, right? So this is just a potential loss being recognized when it becomes apparent. And when these losses are recognized, our profits will be understated and not overstated, which conforms with our prudence concept. So that is the accounting concept. Let's write it down. Conforms with the prudence concept. Ensuring that a potential loss is recognized when it becomes apparent and it ensures that the profit are not overstated. Alright, this concludes the seventh part as well as this entire question number 1 of 2022 October-November paper 2-2. If you found this video useful, make sure you like the video and leave a comment below, and make sure you subscribe to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.